So what we'd like to do today is just to walk you through the asset that we've built at Attest Partners using Oracle's modern best practice to help financial services institutions to solve the regulatory challenges that are coming up, particularly around management actions libraries and management actions calculations as they look to stress test all the services across the bank. What we will do is walk through and very quickly, just the standard modern best practice process. So what you'll see within here is that we've brought together both our CapEx planning, our workforce planning, revenue planning, and then what we're going to spend some time on then is the advanced predictions, the reporting output, and then we'll dip into the recovery and resolution, which is there to give the framework to help to enable the regulatory compliance that's needed by the financial institutions. So what we're going to do from here is just go straight into the revenue planning. So this is starting to show our different drivers, what we're looking at, be that our economic assumptions, the global assumptions that we're looking at, our bond rates, and what we can see across the top is our different products. So these are our loan-based products by the different yields of those products. And below that, we're then looking at the balance deposits that are being brought in as part of those loans agreement and then calculating out, obviously, based on our assumptions. However, what we really want to look into is the revenue control. And this then is just showing all of that standard functionality that we would expect. So if we look across the top, you can see we've skipped through our CapEx and our planning piece. When we think about the look and feel on this can be tailored to look at anyone's brand guidelines and reflection of their financial institution. Underneath, we can start to see our scenario. We can spin up multiple what-if versions, copy all this across all the usual functionality. We're currently within our global banking and markets. If we updated this at the moment to look at private wealth, you'd see all this screen update. But as you can see here, we've got our actuals coming in for the last 3 years. We've then got our forecast and our plan for 25, and then we're also pushing this forward, leveraging the typical out-the-box functionality of driver-based planning, trend-based planning, and our user prediction. But really where we want to focus today is in the agentic AI, so in the advanced predictions. So what we can then see on this screen, and what's really important to talk about here, is this is leveraging the power of machine learning capability that is embedded within Oracle, and you can bring your own models in as well. But it's really set up to be used by the end user, by a business analyst. So at a high level, there is a wizard that takes us through to help us then to set up the models of what we're looking at. So it's bringing that ability to start to add in all the usual best practice functionality that we can do. We can then start to set our calendars, look at our historical data, how far we're looking to trend this forward. You can see we're starting to bring in as well our drivers, which we're pulling through from the core application. But where it starts to get very interesting is in the preparing of the data. So we know that there are data quality issues within every organization. So how Oracle have looked to start to address this is by being able to go back into that historic data, and where we've got missing values or where we've got outliers, look at how we replace them, and that logic can change. But for the purpose of this demo, we can then see where we can start to address some of the data quality issues. So then once we've configured our model, we can then look into actually what are the outputs. So what we can see here is the output of running all of those machine learning models that are embedded within Oracle against the data set that we've got. And if we look at the top, very importantly, we've got our plan data. So what we can see at the end on our year to date is that based on our bottom-up plan, we're already at 112%. So we've already flagging risk based on our actuals. As what this is doing is taking our actuals by period. It's running then the model based on what that forecast and prediction would be, all my bottom-up budget, and seeing how accurate we are, and then spitting out the variance. So as we can see from here, the profit machine learning model is looking by far the most likely when we look at our most likely accuracy. And as you can see, it's within the tolerances that we've decided to set for what we're looking at when it comes to that model accuracy. But really importantly, what this is doing from the perception of a CFO from the Office of Finance is this is about how do we build trust within the output of those models. And we know that within, not just within banks, but within most industries, that the process of reforecasting and doing that is a very, very time-intensive manual process. So to be able to automate that through these models still requires the ability to build trust. So looking back over that historic data to understand the accuracy of that model prediction is very important if we look at how we can leverage the outputs of that to start informing the decision making that we're looking to do. Just very quickly, we've flicked into reporting. Again, this is leveraging standard Oracle functionality. We can start to change our period. Again, we can look at our function, we can look at our business unit, and all of the information automatically updates, because it's important for us to be able to then distribute this information out, whether this forms part of a management reporting pack. But again, it's about how do we get that visibility and insight that's coming out of that machine learning model out to the broader ecosystem that needs to consume that data. So we've navigated back to the home screen, because now what we're going to share is how we overlay to support the recovery and the resolution planning that needs to be done. First, let's have a look at the regulations. So what we've done here is just very simply embed from the PRA, the Bank of England regulations, and what we're just going to focus on for the purpose of this demonstration and example is our net interest income and liquidity. We've now got is our finalized version of our current plan, which you can now see. And what we're now looking to do is to set up multiple what-if variant scenarios to start to model out the requirements that we need for our stress test to deliver that regulatory compliance. So importantly, we can capture any qualitative data in here. And for the purpose of this example, what we're going to look to do is decrease our deposits by 3%. We'll keep linear growth across our mortgages, and we will also have a 5% growth across all our other loans. Perfect. So what we're looking at here is our loan deposits, and we're looking at decreasing those loan deposits by 3%. As you can also see from the chart on the right-hand side, the system is also working out the risk that's associated to doing that, but it's also done in the context of the other changes that we're going to make. So what we've applied here is for the mortgages. So this is for our stress test that was on the previous screen, and we're increasing our mortgage borrowing rate by 22.7%. And as you can see there, that is then seriously upping the risk ratio. And then the final part to this is looking at our other loans and looking at just having a 5% growth across the other loans that we're doing out. So, and again, an increase in loans, an increase in mortgages, and a decrease in deposits to then really understand what does this do from a liquidity perspective to the bank, and therefore starting to tick the boxes of the stress test depending on what's required. Importantly, from here, we can then look at how are we then going to affect other rates. So what we can see on the left-hand side is, as we have been doing, so we brought this in for our stress test, but we can start to look at our Bank of England base rate as an example, and we can start to apply these assumptions and mix of assumptions to our different products and our different yields of products based on this stress test. So what we've seen here is really the benefit of the different types of prediction that you can do from within the Oracle EPM system. Because here what we're actually doing is we're doing user-based prediction. So where the machine learning makes a lot of sense over our complete data set to really try to help to drive out that business as usual process, what we've got here is a user with the ability to then apply the specific requirements from the regulator of the stress test across our total portfolio, whether that's in our commercial or private wealth banking, to then deliver the information that's required to maintain that regulatory compliance. So just to wrap up, as you can see, the look and feel of how we can put this together again can hit the branding guidelines of the bank. We've got our BAU process. We've then got all our different types of prediction, be that driver, trend, user, or leveraging advanced predictions. And we've then lifted that up to then start applying different regulatory requirements for stress testing across the bank in a what-if version, risk and recovery, which enables us to use that user-based prediction to apply the specifics of what the individual regulatory bodies are looking to do to ensure that the bank maintains liquidity and ultimately avoid another situation as happened in 2008. So this has been Paul Suffield, CEO of Attest Partners. Thank you very much for your time. And if you'd like any further information, please don't hesitate to reach out.